last week, or maybe like 2 weeks back, Anthropic released Claude Cowork. And Rahel, what happened when Anthropic released Claude Cowork in India?
It's like the world lost it, to put it quite fundamentally. But I think one of the most kind of immediate, surprising, shocking kind of reactions to that was actually with IT stock. We saw close to, correct me on the number, was it 2 lakh crore rupees of value wiped out in just a few days?
Yeah, it was, I think, I'm just going to look at TCS, Infosys and Wipro publicly listed. They plunged close to like 4 to 7% in February 2026. Yeah, around 2 lakh crores. So basically the reason why all of this started, or at least continued, was because people started to believe and started to understand that, oh, this thing that is coming out is actually more real.
Yeah.
So the fear, I mean, people always had some sense that something was going to happen. And now it became a little more visceral. And that's really what led to this. We can call whether it was driven by panic, whether it was driven by sentiment. We'll come to that. But I think fundamentally today's episode, what I'm really interested in is, for almost like 2 decades, like India's IT giants essentially printed money. And they were printing money with a very simple formula, which is that you hire people, talented engineers, and you obviously like they are much less expensive, and you hire them and you keep them in India. You bill international clients and sometimes even Indian clients by the hour. You scale practically infinitely and you build an empire. But what has happened now is AI has started to change those rules, because what happens when code is starting to write itself? Anthropic CEO is now saying that there will be no more software engineers needed in some time. 100% of code will be written. Agents are taking care of support tickets. So what happens to all of these companies whose business model is essentially sort of selling people? So what we are doing today is we are going to take 4-5 companies, the top Indian IT service companies, and we are going to go one by one, and we are going to do a ranking and say who is going to be the best positioned in order to get past this age of disruption, and who is worst positioned, and what do they all need to do. And of course, we are all going to be sticking our necks out here, and we are going to be doing something a little bold. We have not done this before. So let's see where that goes. So just for consideration's sake, the companies that we are really saying is, we are not really suggesting that any of these will die. They're all going to be fine. They'll all do well. But everyone will survive. But the question is, who is the one who managed to extract and create value that really pushes them to the next decade and the next decade and the next decade? And the gap between the first place and the fourth place is probably going to widen. So here are some of the companies that we're talking about. We're going to talk about TCS, we're going to talk about Infosys, we're going to talk about Wipro, we're going to talk about Cognizant. Before we get our 2 guests in, and just in the interest of showing our guests that we are putting our cards on the table first, I'm going to ask you, Rahel, first. Tell us your ranking in terms of the companies that are going to thrive, from most likely to least likely. Give some broad reason why you've ranked that, and we'll go into the details of it in some time.
So my ranking, and I don't know if this comes as a surprise or not, but number 1 is HCL Tech. That was a name that you didn't actually list out, PGK. But number 1 is HCL Tech.
Nobody talks about HCL Tech. But it's actually a pretty formidable company. We'll come to that. But
we'll come to that. I don't actually want to go into the reasons for it. I feel like once we get into that conversation, we should leave picture abhi baki hai. We should leave some,
okay. So
something.
Number 1, HCL
Number 1
Tech.
is HCL Tech. Number 2 is TCS. Number 3 is Infosys. And number 4 is Wipro.
Okay.
What about you, PGK? I want to hear your ranking.
I'm going to go with mine. Mine is actually... by the way, just for our listeners and for the panelists as well, I do not know Rahel's ranking. Rahel does not know my ranking. We have not discussed this. So we are coming in with us as well. Mine is, I think Wipro is number 1, followed by Infosys, followed by TCS. And I'm going to confess, I did not consider HCL Tech. So now I'm trying to figure it out. Okay, you know what? Okay, number 1, Wipro. number 2 Infosys, number 3 HCL Tech, and number 4 TCS. This is my ranking. With that, okay.
I have so many questions. I'm so excited to get this conversation
We'll
started.
get that. We'll come into all of it. By the way, we are all allowed to change our rankings by the end of this episode. Okay. So with that, I'm going to get my 2 wonderful guests in, and I'm also going to ask them for their rankings, and then we'll dive into the discussion and we'll fight it out. My first guest is Vivek Kant. So Vivek is someone who spent 2 decades in IT services, and he's worked in companies like Tech Mahindra and Cognizant, and he's basically seen firsthand what the outsourcing model looks like from the delivery side. And then after that, he crossed over to the other side of the table. He was at Bajaj Markets as the CTO, where he was a buyer of IT services, and then at Boston Consulting Group, where he was advising large clients on technology strategy. So the reason we have Vivek here is actually for 3 reasons. Number 1, he's seen every side of the story. Number 2, he's been on both, the consulting side, the services side, the buyer side, the seller side. There's a second reason. And the third reason is because, Rahel, what is the third reason?
I would love to tell the story. Vivek happens to be a listener of 2x2. And yesterday, we were putting together this episode. We had our first guest confirmed, and we were trying to figure out who would be a solid second guest who would be able to weigh in on this topic. And as luck would have it, Vivek chooses to write to us about an episode we did a week ago about software engineering. It was this beautiful, detailed email that he wrote to us about his thoughts on the future of engineering, how he was looking at it, and he also linked his Substack and his LinkedIn.
Which we'll link to in the show notes of this episode as well.
PGK and I glanced through his Substack, where he has written phenomenal blog posts on engineering, IT services. And we thought, you know what? What if we reach out to Vivek and we ask him if he would actually be on the episode? I happened to have a long conversation with Vivek last night, and he has phenomenally interesting insights on the topic that we're discussing today. So extremely excited to have him here. Thank you so much for joining, Vivek.
Welcome, Vivek. How are you?
My pleasure. I'm very well. Thank you. This is very, very exciting times and pleasure to be on this podcast.
Okay. Break the suspense. Tell us, what is your ranking?
Okay. So my ranking, and I had a very interesting conversation with Rahel last night. So I would actually rank TCS the first, HCL the second, Infosys the third, and Wipro the last.
Okay,
and
fine.
All right. And I will refrain from ranking Cognizant because I spent almost a decade with that organization. So it's not fair.
Fair enough. I mean, I'm not going to push you to do that. By the way, that is one thing, Vivek, you and I have in common. Well, not in common. One thing is that you spent a decade in Cognizant and you did a lot of great work there. I spent exactly 3 months at Cognizant, where I never tell people I worked at Cognizant. I said I was employed by Cognizant because there's a big difference between that. So we have that thing in common. So we leave Cognizant out of it. And also, I think Cognizant is slightly different from the rest, to be very honest. They are like, it's not very clear. Are they Indian? Are they international? There is a slight bit of this thing. So we'll keep Cognizant on the side, although we can talk a little bit about it. My second guest, to be very honest with you, I'm very excited. And quite frankly, is a little overqualified for this conversation. I have Mr. Krishna Kumar Natarajan, whom we insist we call him KK today. So many of our listeners have probably already caught on. Mr. Krishna Kumar Natarajan is the person who is the co-founder of Mindtree, which is one of, shall we also say, an IT services giant? I think it's a legitimate IT services giant that was set up in 1999. He built it into a multi-billion-dollar global IT services firm, which actually competed with some of these companies that Rahel, Vivek, and I were talking about. He was also later the chair of NASSCOM, where he was shaping policy for all of these IT services companies. And today, he runs Mela Ventures, where you back early deep tech and enterprise founders. Maybe, KK, you can tell us a little bit about Mela Ventures.
Thanks, Praveen, and it's a pleasure to be on this podcast. So when I decided to exit out of Mindtree when L&T took a majority stake, the options in front of me was to build another IT services company, potentially a brownfield, because by then the capital scarcity was not there. There were many global PEs who were willing to back. But then I realized, why should I prove myself building another billion-dollar company? I would rather help other entrepreneurs.
Sentences that we don't hear very often. Why should I
that's
do
what people might should call a flex. That is the ultimate flex.
Well done. Nice. Please continue.
So I think I really said, how do I make, because clearly this is my last gig. I always tell people I've had the fortune of having 3 innings in cricket. Even in a test match, you're allowed only 2 innings. I did a startup within Wipro. I was the 6th employee in the IT division, worked there for 18 years. Then Mindtree was another startup, and Mela Ventures, my third startup. So how do we create successful entrepreneurs who can think of building global businesses? That was really the driver. And that way, we are not a typical venture fund. We are very focused on just helping companies which are B2B businesses, primarily technology driven, and how from India they can create globally successful companies. That's the focus of Mela Ventures.
Nice. Now, KK, I'm going to put you a little bit on the spot. 4 companies. I'm sure you have, you have like associations and ties and history with all of these companies. Can I push you to make a ranking?
See, Praveen, I think I would not do a ranking of them because
Fine.
I do believe that each one of them have very, very solid strengths. And the good part is each one of them is playing the game very differently.
Okay.
And the way in which technology is changing and the way in which disruptions are happening, I think it's very difficult for anybody to make a call in terms of what is going to win. What I'll rather share is how do I, as an external person, see these companies preparing for the future, which is of disruptions.
Fantastic. I think it's not just an external person. You're really doing yourself a disservice. It's not an external person at all. In many ways, KK, you have also seen this journey. You've seen this journey from from the beginning of when it has been happening. So you've seen various waves of disruption come and go. You've seen these companies fairly closely as well. So I'm sure you'll be able to play the role of, shall I say you'll play the role of the adult in the room where all these kids, Rahil, me and Vivek, Vivek, I'm sorry to include you with us, okay? Where we are going to try to fight it out and try to figure out who's really going to win, who's not. And you can give us some historical context and
Absolutely.
not just that, you can tell us what's happening.
Context and what I understand in terms of the strategic intent and directions
Okay.
of probably all the... I think you need to include Cognizant also.
Okay, fine.
Because in my sense, I think while they're a US headquartered company, the business model is very similar to all these 4.
Okay.
I don't think there's an iota of difference in terms of thing.
Fine.
In that context, while they may not be available as a stock to invest, or for that matter, tomorrow I think there might be a fund which might, a mutual fund which invests in US market might hold Cognizant. So it is relevant for investors also.
Okay. All right, fair. I think I'm going to start by basically then saying, first I'm going to ask Rahil, Vivek, do you want to talk a little bit about your ranking? Vivek, why don't you go first? You seem to be the one with the best, perspective over here.
Right. So let me start with TCS, and that's a company I never worked with, but I have admired significantly. In fact, I have actually worked in a lot of contexts where I was competing against TCS, and there was always, they were, very worthy adversary. And the reason I believe TCS will come out of this disruption rather well is their ability to pivot on their business model. So look at the kind of businesses TCS does. So firstly, they do a lot more IT-enabled services, and that too domestic IT-enabled services in India. Look at the Passport Seva business they run, where they have the software stack, they have the people, the infrastructure, everything is managed by TCS, and they deliver the outcome not just to the government but to the ordinary citizens. So that is the kind of business that is very difficult to disrupt. Because if tomorrow AI is going to generate a value, that value is going to be realized by TCS themselves and shared with the stakeholders. So that is where, I see TCS to do very well because their ability to do very different business model.
Is it fair to say, Vivek, that TCS is the largest? I'm just looking at some numbers. 600,000 employees.
Also, TCS is the oldest.
TCS is the oldest. And also, I just have to point out to our listeners that just yesterday, there was this news that broke, I think it was in the Economic Times, about how
Chandra
taking a very...
active role in the AI transition.
Active role, because what he's doing is he's really saying that, look, I think they got the top 200 leaders of TCS. I think it was at Dubai or something.
At Dubai,
right? And essentially they said, look, protect TCS at all costs from a Tata perspective. So if it's literally like the whole machine, like the thing, the eye and the attention has completely come towards TCS now.
Yeah, the second reason is TCS. If you look at their ability to move to adjacent businesses, like they are the ones who are building data centers now of all the IT
correct.
services business.
Correct.
Hypervolt.
Yeah, exactly. I mean, and most importantly, their ability to make big business bet and take very strong decisions. For example, just a while back, they actually restructured some of their middle management, considering that is the one which is going to be hit by this AI wave the hardest, and they are able to take this. So in terms of, besides everything, their ability to, as a, management capability that they have to take decisions, pivot business model, move to adjacent, their size, not just the TCS size, but the Tata Group that backs them, and with Mr. Chandra at helm, the far more synergy between the group companies. I believe they would come out the best in this entire wave of disruption.
In fact, Vivek, this was something PGK and I were talking about a couple of days ago. We were trying to figure out what that ranking would look like, early stages of figuring out our idea. And first and foremost, we were like, okay, TCS is essentially this fortress. But then we really got thinking about it and we were like, but won't its scale kind of work against it?
Yeah, because I genuinely believe that. I think TCS is the worst position or one of the worst positions.
But PGK, TCS has been able to, like Vivek pointed out, pivot in a way that is so surprising for a firm of that size, right? The bets that it's taken are so bold that you would not expect it from the likes of TCS.
I just say
why I would say the scale will actually work in their favor. It is because their ability of deploying that scale into completely different businesses. So I would not be surprised if tomorrow TCS takes this 5,000 entry level engineers and retrains them to manage data centers, for that matter, or work in something else. So their ability to pivot and deploy the workforce is also the best, because from a process perspective and the management perspective, they are the most mature organization.
I just have a slightly different point. Vivek, I think your observations are valid in terms of TCS ability to pivot. In fact, beyond the data centers, if you go back to, they were the first to buy that UK company which does entire end-to-end insurance processing. But more than anything else, that was Chandra's brainchild, and they really stuck with it for almost 8-9 years, losing money. No other company has done such a bold effort. And today, I think it probably certainly contributes at least 10-12% of their revenue. And they own the entire end-to-end policy administration for the insurance industry in UK. But having said that, the one area which I would see, which I would like all of you to comment about, is I think this disruption is certainly going to have an impact in terms of how the people within the organization behave. The model which TCS has followed, in a quote, you could almost say it's a military style. People, your manager tells you what to do. He'll send you an email saying, hey, next Monday be present in Bhubaneswar Center for joining this project. You can't question. So it's a very military thing. Every CEO transition has been completely smooth. Ramadurai to Chandra, Chandra to Rajesh Gopinath, Rajesh to Kirti have all been very smooth, because once the top management gives the guideline, everybody marches to the tune. But in the current context of the future business, you need to have people who have more EQ than just following rules. You need to have people who have the curiosity, and majority of the TCS force is actually, in a way, they curtail them not to express their curiosity.
In fact, I'll let you continue, but I'll say I completely agree with you, and that was exactly my reasoning as well. It is the people itself. But please continue.
But I'm saying, I think they realize these need to be done. But at the scale of 325,000 people, it's not an easy change to make. To make your people think customer backwards, to make your people curious, to even within a team meeting for the youngster to say, hey, Mr. Manager, you're really talking junk. That requires a different mindset. That requires clearly a very different people approach, training approach, because this is not technology. This is, you're trying to change hard behavioral traits which are ingrained as a part of the organization. Because the TCS culture is, the manager tells you to jump, the person in the team will say, from where do I have to jump?
TCS also says that it has 1.8 annualized AI services revenue. This is of Q3 FY 2026, which is growing 17% quarter on quarter. Fine. Okay, we'll take that. It also basically, it is like deploying AI. I was reading about TCS and how they've been deploying AI. It seems like they have some internal tools, but they don't seem to be building like a proprietary AI platform stack like an Infosys as an example. So it's more of AI enabled rather than AI platform-ish is the sense I'm getting. But let me ask this question now to both of you. And this is clearly where Vivek and KK, you're more qualified than Rahil and I, which is, before we get into the other companies, suppose I asked you to just step back and look at these 4-5 companies. Could be TCS, could be HCL, could be Cognizant, etc. Forget about their chances and predictions of the future. How do you see these 5 companies? Like, for instance, what is so distinct about them?
Vivek, can I go first?
Please, sir.
Now, if I think about TCS, what is distinct about them beyond the culture of just following rules, which is very critical in the earlier services space, because client is giving you very critical system, you just need to follow process,
Correct.
which is why CMM level 5 became a standard for all Indian IT services companies. But they're also very high engineering mindset. In fact, they have some of the best tools in terms of ensuring delivery is consistent. They have some of the best tools to drive productivity even before some of the automation tools became mainstream. So the engineering mindset which they have is clearly very strong. On the other hand, I don't think they're very marketing driven. The only thing which I can think in terms of building the brand was again largely Chandra's thing in terms of tying up for all the marathons which today they stand for. The New York Marathon to the Boston to every thing.
Oh, I didn't know that they were a brand for marathons globally. I knew they were in India.
Yeah, globally they are.
They are.
Boston.
Yeah.
Interesting. Okay, Rahil is the one who's the marathon runner in this group. Okay, go on.
So I think those are what I call as organizational sort of thing. They're still very engineering minded. And I think in the new world, what does this disruption mean? In the traditional IT services spectrum, you are delivering by mass, which means if you're maintaining an SAP system, you have to build a system for how do you handle calls, how do you solve the user thing. Everything was based in terms of delivering at scale. The big difference which I see in this disruption is you have to practically deliver your service to the individual within the organization.
Got it. So from a DNA standpoint, what you're saying is TCS is like good engineering mindset, but tend to be the kind of organization which was really good earlier, where tell people what to do and people would do it really well. A lot of discipline, the brand you've already spoken about. What about the others? What about, say, an Infosys or a Wipro? Just the DNA from your standpoint.
See, Infosys, I think thanks to the initial thing with Nandan really put in, is very domain and business focused.
Okay.
They probably put in a lot more effort to understand the customer's business, really build some expertise around it, which again is very critical in the disruption. And I would think that is clearly their strength. The fact is, how is this going to play out in the next 5 years?
We'll find out.
I'm not there. I don't, honestly, what I would be little skeptical or have a question about is what is the succession plan in Infosys. At the end of the day, Salil has already spent, I think, 7-8 years. Clearly, there has to be, I don't see, again, any internal successors being groomed or even being presented. So that would be a key issue, because this disruption to manage this is going to be very leadership driven. So the quality of the leadership is going to be very critical, which at this juncture, I'm not sure in terms of what is in store.
Interesting.
I think they've also built some good platforms thanks to the experience they had in Finacle and building other platforms. So I wouldn't have a concern on that. But the question in terms of how do you really retool your people, because everybody is thinking in terms of saying I'm upskilling people.
Correct.
But that's only one part of it and people will get that. But the bigger thing is how are you retooling people for behavioral aspects? I think that is not being adequately addressed. I would still have a concern even with Infosys on that.
Interesting. So Infosys, from your standpoint, great at domain knowledge.
Yes.
Great at understanding specific businesses. We understand there's a question mark on succession. We understand there's a question mark on, tooling skills, etc. I'll just pause here and ask Vivek to jump in. let's just talk a little bit about, do you agree with this characterization of TCS and Infosys so far? We'll get to the other two.
No,
I'm just
I
wondering
think,
at a high level.
yeah, I fully
From a
agree.
DNA
In fact,
standpoint.
and absolutely spot on with the characterization. Actually, from a TCS perspective, while I agree with the aspect that they are very military or regimented, where they are top driven, and once order is given, I think as we move, their ability to move away from the software engineering as their core business is also we must consider.
What does that mean?
So what does that mean is, today their software engineering is their biggest business, which is basically building and maintaining softwares for their clients. Now, their ability.
Sorry. I'm just completely uninformed. Is that different for the others?
Yes, no, it's actually pretty much that is the biggest
It's
business.
yeah.
I'll come to HCL in a bit, which is
Yeah,
a
we'll
little
come
bit
to
different.
HCL.
But
Interesting. Okay.
but TCS, but their ability to pivot away from this business. So I talked about the IT enabled services, the data centers, and actually doing different. If I will not be surprised if they actually go into adjacent businesses which are not disrupted, or which are not just software development. I would not, that can happen with TCS, and they can do that very fast. And their ability of, driving a very large, workforce in a regimented manner is going to help us reach there. So that is why I am pivoting, or rather putting TCS as the top of the ranking.
Okay. And Infosys?
Infosys, I think I agree. Infosys, my worry would be, as KK is saying, is the leadership. Because if you see, out of these 4-5 cohorts, the two companies that stand apart is HCL and TCS, because all their leadership is in-house. Now, what it does is that it does two things. It basically retains the institutional memory in the leadership. So you don't have any big disruptions. And it also makes the leader very effective, because leader has spent decades in the organization. He knows what can be done and how it can be done. So their ability to navigate difficult times is much better. As compared to Wipro, which we have seen multiple leadership changes. Infosys has seen some disruptions. And of course, Cognizant went through its own challenges with leadership. So that is where, HCL and TCS have the best, because they have not just the second line, probably, I don't know, but I'm sure they have, second, third, fourth line as well.
I would argue that for Infosys, there was a huge, you can argue missed opportunity, or you can argue scar tissue with Vishal Sikka, who was the CEO of Infosys some time back. And again, of course, people inside Infosys and who are people part of it have their own story to tell. But purely from an external standpoint, it seems like if that had worked out, one could have imagined that technologically there's a lot of foresight. They could have been really ahead of the pack, but that did not work out.
Absolutely.
So
there is this OpenAI investment that people talk about.
Yes. Okay. We'll of course talk a little bit about that. Okay. Great. We have just touched upon the DNA of TCS and Infosys. This is great. Now I think we should go to HCL and Wipro, and maybe a little bit we can touch on Cognizant as well. Yes, KK. Tell us about HCL. I think HCL Tech is the one that is the most
interesting. Yeah, I see it as the underdog story right now.
It's not much of an underdog if it's really up there, but sure, we can talk about.
But is he, for instance, when you gave your listing in the beginning, HCL didn't even occur.
That's
true. I see it as a little bit of a underdog.
Can you talk to us about HCL Tech?
No, I think if you look back, I would tend to sort of echo Rahel's thing. It has been a little bit of an underdog, but what is sort of helping them now is certain bold decisions which they took 5-6 years back. Again, just specifically trying to comment about a piece of business. IBM decided to sell out a set of maybe 10-12 products, and they clearly said, hey, we don't want to carry these products. You guys buy it and you have to run with it in terms of sales, because there's a lot of tech debt in it. Again, I must be honest, at Mindtree, we evaluated a product which was close to our services adjacent. But then we said, hey,
which was sold by IBM?
Owned by IBM.
Okay.
IP and the team, everything will get transferred to you. So we sort of said, no, I think we wouldn't do it. Anand of Persistent went little bolder, bought 2-3 products. For maybe 4 or 5 years, it was hitting his P&L. But then it suddenly started going up. HCL was the only one which I think bought about 8 to 10 products of IBM. And certainly they've been able to remove the tech debt, they've been able to reposition it, and clearly that gives them an advantage today in terms of revenue, which essentially is a lot of annuity revenue. It's almost like you think in terms of an ERP being an annuity revenue for 10 years.
Correct.
So the lesson or the learning which I wanted to think, see, they're a company which clearly is willing to take risks, and that comes from Shiv's normal thing. Shiv that way is a very, very risk-taking entrepreneur, and that DNA has got passed on. And what I understand is the new chairman again is very clear. I'm not going to interfere. I'm only I'm a part owner, and I'll just stick with my governance. So CVK has phenomenal flexibility to think in terms of the transition the way he wants to do, and the owners are willing to sort of back him. So I would anticipate they will continue to take probably bigger, bolder risks than all the other people, which will help them in things.
Very interesting. By the way, KK, I have to say that last Saturday, I wrote a newsletter about TCS, Infosys, and the lessons of IBM, where I basically went back into the history of IBM over the last, say, 25 years and said how basically when IBM was like, everyone knows in 1990 where IBM was, and by 1993, they were like completely in a difficult position. But one of the things that actually kept IBM through from that period of 1993 all the way to like the mid 2000s is they had this annuity business coming from their mainframe business.
Correct.
Which is what allowed them to keep going and saying, okay, we can either do stuff over here, we can try to hive off some businesses, etc. And you're absolutely correct. I missed the HCL part, but I didn't know that they sold like few things to HCL, and HCL took it up.
In fact, it was a $1.8 billion deal, and apparently it was the biggest IP deal ever by an Indian IT firm.
Yes, you're right.
Yeah.
Wow. Okay. Vivek, talk to us about HCL. This is actually quite fascinating.
So HCL is actually quite different. The different primarily is in their business mix. Now, while, and this is exactly, to the theme of this podcast, while we may look all these IT services as similar in a homogeneous set, there actually HCL is quite an outlier. The first major difference is that, and I was trying to look up some numbers, they don't publish it well, so this is more so estimate, 25% of their business comes out of infrastructure managed services, which is primarily managing clients' infrastructure, which can be on-premise infrastructure, cloud infrastructure, databases, application servers, and things like that, and or various other things. Now, most of these deals are long-term and in a managed services fixed price or outcome-driven model. Now, what it means, instead of application development, maintenance, and a large time and material kind of model, where the productivity becomes a loss for revenue because it reduces the head count and does not lead to proportionate increase in billing rates, it leads to loss of revenue. HCL has been very good in doing a massive amount of automation already in the management of these infrastructure business. Things like trouble ticket resolution, end user computing management, looking at database monitoring, automation of issues and resolutions and things like that. Now, they can actually have the ability to supercharge with AI. So what it means is that today, if a customer's infrastructure is managed by 50 people in HCL, tomorrow with leveraging AI, they can actually do it with 5. So they can have a 10x value generated, of which they can actually pass a part to the client, and it's a win-win for the client and the company. And of course, the clients would love it because they would believe that since the HCL has domain knowledge and understanding of their infrastructure and their context, they have a better ability to deploy AI and generate value out of it. So that is where 25% of the business is, if AI disrupts that business, the value is retained by the organization and not transferred to the client. So that's the first reason.
Interesting. And that is the part of the business that an AI cannot take away, because fundamentally you are managing it. By the way, I must also stress that HCL is the only Indian IT player that separately reports AI revenue. And it reported AI revenue, if I'm not wrong, I think last year of $148 million. And I think Shiv, who's the CEO in Davos, essentially said that we believe that this can grow to $2 to $2.5 billion in like a few years. So I'm not at all surprised.
If we could just take a second, Vivek, because you had a wonderful explanation that you shared with me yesterday. We actually spoke about HCL Tech for a fair bit of time, and he explained like the business mix of HCL and how they're kind of more infra driven.
Yeah, and more managed services.
Exactly.
As you say, right?
So versus what everyone else does, because that's truly like the real kind of edge that HCL has. So if you could kind of explain what it is that everyone else does and what HCL is doing.
So large part of IT services is what we call as ADM, application development and maintenance, which is primarily building software for the clients. So tomorrow a client wants to build a software to automate, transform, digitize their part of business processes. So say IT services company will deploy certain business consultants, work with the client to draw up a specification, do the design, build the software, and then maintain the software with over its life cycle, do enhancement, things like that. Now a large part of this business that I was explaining, Rahel, is what we call as time and material. Now what does time and material mean is people who are not understand IT services businesses, it means that any IT services company will tell that we will work with you, but we will charge you on the headcount we have and the billing rate for different roles that we have.
Correct.
A project manager, an architect, a senior developer, junior developer, and so on. And what it means is that that in terms of delay or risk of on the project with the time slippage, scope slippage, the risk is borne by the client. And that is why, and most of the Indian IT services has preferred time and material businesses or model to what we call as fixed price model. Fixed price model is client gives you a set of specifications, you go and respond and give them a quote of time, a particular timeline that you will deliver and a cost that you deliver. But what it means is that any delay that happens for various reasons, and software development is a very precarious business in terms of scope and time creeps that can happen. The cost will be borne by the IT services company, and that is why IT services have been hesitant in doing the fixed price bids. Now with the time and material being the dominant commercial model of engagement, and application development being the large chunk of IT services business, any disruption with AI which reduces the headcount, increases the productivity, directly impacts the revenue of these clients. And that is exactly why the market is speaking about these companies.
Understood.
Yeah, I'd just like to bring in another perspective since you asked about both HCL and Wipro.
Yes, please.
If you go back to history, these are two companies which really started with what you could call product engineering services, which means you help other technology companies build products. That again came from the history because Wipro had its own internal R&D, which was building computers for India. And once the open policy came, they couldn't sort of sustain their own line of products. Otherwise, they built mini computers, personal computers. So they had that capability, which they then decided to reposition as a global lab on hire, which means you build products for the Cisco's and all other people. Similarly, HCL also had an R&D. So both of them are people who have a long lineage of building products for the global world. And I think in this disruption, 5 years back, people used to say software will eat the world for breakfast. That scenario is distinctly changing. Clearly, we are seeing the resurgence of hardware and complexity of physical AI, which is really coming into the hardware devices. So people who are building products will certainly look for partners who have the capability of both AI as well as designing and implementing products, which places both HCL and Wipro clearly on a strong footing.
Interesting. So you're saying, that is their wedge.
Yes, that is their wedge.
We should transition into Wipro very quickly. I know you already
No, actually, before that, I'll just
Praveen,
add on to the HCL point.
Yes,
both Wipro and HCL have the legacy of building hardware businesses. Now, HCL has actually carried that much further. So I was trying to again check the number. They didn't specifically report, but it's about 15% of today's their revenue comes from what they call as engineering and R&D services, which is actually not just building the products, not just building the software products, but doing very deep engineering work. Like, for example, embedded systems, the software that drives your cars, So that goes into your infotainment system of your car and that drives your car, the software that goes into, smart devices and things like that. So a lot of their work is very deep engineering. Now that gives them two distinct advantages. One is basically they can actually, this kind of software is the least impacted by AI, because these are very critical software. Even a small bit of error can actually have a manifold impact. So you need, even if you use AI for productivity enhancement, you need a very skilled engineer to supervise the AI to write that code. So that business is not getting impacted as much as AI, like building a website or building a simple consumer technology mobile app would be. So that is one. Second, this is a very hardware adjacent business, as KK was mentioning. So your ability to actually partner with companies to build devices and smart devices, automotive, or or robotics and future automation engineering and industrial engineering. So the AI that goes into manufacturing processes and things like that actually gives HCL a significant edge in moving in this adjacent market and adjacent businesses and actually leapfrog in this area. So that's another advantage that HCL has. Now, just to point out, while TCS is a software company, we should not forget the Tata Group and the adjacent companies and the synergies with Tata Honeywell and Tata Technologies and others as well, because that capability lies in if not in TCS, in the group anyways, and the synergies can be drawn and can be worked in that place as well. So that's the another point on HCL.
Fair. I agree that Tata Synergies is like a different podcast in itself, and you can say that about any of the Tata's businesses, by the way, which I agree. I think I just want to touch upon Wipro. I think
actually, PGK, may I ask why Wipro was number one on your list?
Because I'm curious. Is number one on my list for a very simple reason. So for me, I think the thing is that whenever you talk to people always essentially say, well, of all of these companies, Wipro is the one that seems the most vulnerable. And, or at least it seems like we don't know what's going to happen. And I'll tell you why people say that. The reason why people say that is because, again, for Wipro, if you see, Wipro's revenue is somewhere around, say, $10.5 billion with a margin of like 17%. But its IT services revenue went up by just 0.2% on a year-on-year basis. And if you look at, and by the way, this is not even accounting for constant currency. If you look at currency fluctuation, etc., it's actually like a little bit lower. So it's essentially flat revenue, number one. There's not much movement in their large deal booking. I'm just going through whatever Wipro has said publicly. But the thing that I find very interesting about Wipro is, one, they have this interesting margin. Their margin is 17.6%, which is one of the best that they've had. So it's essentially something that they have created margin, which is pretty interesting. Number two, they have a CEO who's really interested in proving a point. They had Srini Pallia who took over in like 2024. And they had a previous CEO who basically did a bunch of acquisitions, didn't really work out, etc. It was all chaotic. And I think that partly because of hardware, partly because of they have some partnerships with Microsoft, and partly because of a CEO who's like really, really ready and desperate, in my opinion, they are the ones who literally have the least to lose. So I think they will be the ones with the most to gain. So that's really my logic of why Wipro is number one in my list. But I would like to, if maybe, Vivek and KK, if you want to, we talked a little bit about Wipro, about its hardware and its R&D and its original genesis. Is there anything else you want to talk on about Wipro?
So I think I'll just say that Wipro is the company that I know least about, I guess, because, of my limited interactions. What I have seen as an external observer is one, they have not built any intellectual property of their own in their decade. So if you look at all the other companies, by acquisition or by, organically, they have built a lot of intellectual property, and that gives them annuity business, that gives them engineering talent and so on. Wipro has not built any, major intellectual property. The second aspect is that they also had the trouble with leadership. Now, one thing I have learned in my decades in IT services is less business of technologies, more business of people. Now, your leadership, which has understanding of the pulse of the organization, knows what the organization capabilities are, and how best to realize the potential and leverage those capabilities to drive your agenda, is the most crucial capability that is needed. And Wipros, with all their troubles with leadership and the recent, frequent changes, has the least leadership capability, I would say. And that is why I had put them last in my list.
Okay, so now all of these 4 characters are now starting to stand out, right, Rahul?
Yeah.
They're like, you're able to talk about them a little vividly. Let's go one by one where we stand. Number 1, let's start with TCS. TCS, of course, I mean, I'm just talking about characters. And by the way, this is all from a storytelling standpoint where they look like this big giant
Fortress.
fortress, like extremely well connected, extremely well funded, clearly has the attention of probably one of the most powerful people in India, Chandra, who's like looking at it now. Mandate is clear. They are also, I think, willing to take
Risks,
hard decisions. They look at the things that TCS has done with their layoffs. They have decided that they're also going to invest in hardware. So clearly it's like this, they have both size as well as the ability, that momentum is slowly building.
Yeah.
So you can see that. So I think visually I see it as, like they say that when the mountain moves, the ground shakes. So this is the mountain moving, right?
Yeah.
So that's TCS. I think Infosys, I see it as, is this company that has a very long and of course a very storied history, but also has very deep domain knowledge, which means that they understand these businesses that are getting disrupted really well. They understand financial services, they understand health insurance, they understand medical, they understand these places, and they're all over those, they're deep there, they understand these domains quite well. But the question is, what is going on with leadership? Do they have succession planning? Not sure yet. I think, but on the flip side, they seem to be doing some work on the platform side of AI, so they're seeing it slightly differently. So that's them. So you see the kind of this thing that is like a little bit on the periphery, but you're looking back over your shoulder and saying, okay, who's behind me? Yeah. So it feels like that's that kind of a company. HCL, I think my analogy is, if there is like a chessboard, it's like the knight that is standing in the center of the chessboard. It can hop on any side, right? Because the knight is really powerful at the center of the chessboard. So they can jump into hardware. And as, Vivek was saying, they basically have this thing in like managed services. A lot of their businesses comes from managing all of that. As KK was saying, HCL is this company that has this very storied history in R&D and in hardware as well. And of course, we also spoke about the aggression and the willingness to take risks that KK was talking about. Like HCL is a company, of course, they spoke about IBM, how they have been willing to like do all of these really bold moves, which is probably what's needed later. And of course, we come to Wipro. Wipro, of course, seems like it's cornered, seems like its growth is not there, but I feel like it has a point to prove. And so it's an IT services company that also has this history in hardware, but needs to figure out a couple of these things in order to get there. So we've gotten this cast of characters there. Maybe we can very quickly touch upon Cognizant as well and spend 5 minutes. I know difficult for Vivek and for me a little bit. Not so much for me. I can talk about it. But
so I think, so Cognizant, I spent about a decade there. I think my...
So you're a biased party, which we're going to say upfront, which is okay, but please continue. Go on.
So I probably had the best time of my life in Cognizant, had the best mentors, and I always believe, I must not shy away saying that some of the mentors I had in Cognizant, they are the reason where I am today. So, but I think Cognizant took a very drastic turn in 2019 when Frank left and Brian Humphries joined as the CEOs, and that led to a massive exodus of talent. Now, which people call it Cognizant Mafia or CEO Factory or whatever it is. I think the wider industry is the beneficiary, but the organization significantly lost senior talent. Now, I think after Ravi, it's trying to build it up. And it's going through some challenges time. So only time will tell whether it is able to turn around, bring that old glory back, or it'll it will not it will go down in history. I think I still worry about Cognizant because with the new leadership, I don't see very stable the second, third line of leadership being groomed and readied for driving, and it becomes more a lot of people are recent joiners, and and there is a lot of churn within the leadership as well. So I think that is probably the reason I would see Cognizant struggling for a bit, and only time will tell if it is able to find its mojo back and actually do well. But I still believe, because a lot of clients have stood alongside with Cognizant, and they have still managed to retain a lot of clients, a lot of good business that they have, and they also actually were quite risk taking. So they acquired business like CoreLogic, Trizeto, and all of that, which is IT enabled services, and
Correct.
which including intellectual property as well.
Yeah,
So they
Belcan,
have the
engineering
capability.
services, Thirdera from ServiceNow. So yeah, I agree with you. They have
So
some
they
acquisitions as
have
well.
the capability. I think it's the leadership and ability to navigate Cognizant through this difficult time and actually build that old glory back. So that
KK,
only
how do
time
you
will
see
tell.
Cognizant?
Because you said earlier on that this is not a firm that we should be overlooking. So I'm
Yeah,
curious to know where
absolutely,
you're
I do
coming
feel.
from.
Tell us.
No, because genuinely, if you look at what Vivek said in terms of customer love and having been established in one segment extremely well, like their healthcare and life sciences business is probably 40% of their overall revenues. They were the first to acquire a company like Trizeto and get into a transaction and annuity based revenues. But honestly, if you ask me, Frank is the top 5 percentile of CEOs in the IT services world itself. And a lot of it was Frank's foresight and how he saw it. And he's doing an equally good job on his PE thing. The firm is called Recognize.
And he's the CEO that Cognizant lost in 2019.
Yes. I think Brian clearly tried shaking and trying to do stuff. And I believe that's also partly because it's a typical US organization where the board exerts enormous pressure on management to get results very quickly, which doesn't happen. Like Vivek said earlier, it's a very people intensive business. First, as a leader, you need to have clarity in terms of what is it you're going to do and what is the direction you're taking. With the current scenario, it's very difficult for any CEO even to say that this is the direction I'm taking. He has to be very flexible and keep moving. So I do think that Cognizant being a US headquartered track company, it's actually a deterrent for them because obviously boards there just want to put pressure on management to deliver something in the short term. In a way, I hope I'm wrong. The little bit of revenue uptake which you see now is also probably based because of that. But I can't see strategically where are they going. I must be honest, for a company which has phenomenal depth in healthcare and thing, I would have sort of thought of a strategy where how am I going to make healthcare a 10 billion opportunity by itself. That sort of clarity in strategy isn't really emerging in Cognizant. And the other point which Vivek mentioned was also relevant because I think you have lost a lot of talent. You are filling them up. Jatin as the CFO is again world class, no question. But then any new people coming in, how are they going to gel as a management team and deliver results? I think that's going to be a question mark.
Very interesting. I think it's pretty clear that at least Rahil, Vivek and I, we all have our reasons for picking.
Yeah.
Rahil, you picked HCL.
HCL one.
You
TCS
pick
two.
HCL. Okay. I think Vivek, you had picked TCS if I'm not wrong.
Yes.
Yeah.
Okay. And I had picked Wipro and we are all made our reasons clear. It's pretty clear. I think I'll just in the last 20-25 minutes, I just have two things that I want to touch on. Number one, and this is for you, KK, which is we know this is happening. We know this disruption is happening. We know the nature of the disruption. And fundamentally, we know what the disruption, which is that I think there are many things about AI we don't know, whatever. But I think the one thing that is coming and becoming non-controversial, becoming fairly evident is its ability to create code at the end of the day, right? And that cost is going to go down, right? Given this reality, what do you think if you were in these companies, which you were, okay, you founded $1 billion behemoth. So obviously, I'm going to ask you to put that hat on and say, what's the path for any of these companies? And without going into any specific company, I'm saying, what should an IT services company do? People talk in terms of broad strokes, which is, it should innovate, it should upskill. We understand that. But is there anything?
See, I would think if there is a need to start really thinking customer backwards, this is really the time to do it. Because the fact is, all these companies are customer centric even in an earlier era, but that translated into building up processes which will deliver consistent delivery based on a set of parameters.
Correct.
That scenario is completely changing. Here you don't know what the scenario is, you don't know what is to be done with it, which is why the whole idea of Palantir putting people called forward deployment engineers in the customer, which means you are seeing the customer's problem, you sort of start absorbing that and then start asking the right question so that you could, in a way, custom build a solution for it. So I think we are moving away from probably monolith programs like mainframe to the ERPs to standardization of software to what is individually built potentially for each function and each department within a company, which means companies have to rethink in terms of organizational structures. I think you can no more have the 3 levels of delivery where you have 20 people to a project team, a project manager to manage the matrices, and a delivery manager to oversee him. That structure is not going to work. You need to reduce the number of levels with the customer. I clearly anticipate there will be smaller teams which has multifunctional people, and potentially you could even bring in a gig worker as a part of that team. I need a creative designer to solve this customer's problem for the next 45 days. So I hire somebody temporarily. He works on it and then he pushes off. Today he works for Cognizant. Tomorrow he might work for TCS.
Oh, okay. Interesting. Okay. But that is like going to be like a...
No, I think there is a big transition which is going to be certainly happening, both in terms of current organization structures and how you need to think in terms of how you will deliver to customers. Because we are too much used to the thing of writing specifications, getting SHAs approved by the customer, and then just following it to the I and T.
Correct.
That environment is certainly going to change.
Yeah, I just have to say anecdotally, I mean, like I said earlier, I worked at Cognizant. I was employed at Cognizant. I did not work there. But I think the reason I say that is because I was there for like a few months and I spent, to your point, almost like 3 months in this phase called requirements gathering, right? Where essentially all I'm doing is I'm sitting over here in Chennai. And what was happening is, and we had a client, and the client was, I think it was an insurance client. I don't even remember the name. It was that long back. So, but what I did was, I would go once in a while, there would be this call where somebody would explain, this is what we want, this is what it is. And of course, it was on COBOL. I don't know if COBOL is still happening. I'm assuming it is. So, which is a mainframe language. So, I know this thing that you're talking about, which is you have this long linear process, which of course later they say, oh, it's a waterfall, you get some, whatever. But you're saying that kind of like comes under pressure and collapses.
Yeah.
Okay. Vivek, how do you see it?
So actually, I would completely agree with KK, and to put more color from
what
from
man?
a
I was looking for more disagreements. Please go on. Yes.
So basically, see, for last year or so in my current role, I have a good opportunity to code 3-4 hours a day, and I had last 1 year I have been using AI to code. Now, what I have seen is that the biggest impact AI will have not just on the number of resources or people you need to write the software, but the talent profile you'll need. Now, what will happen is today, if our average engineer finds AI very difficult to work with, because it is not a problem of generating code. It is a problem of writing the right code and how to use AI to do it. Now, anybody who has done program knows this. Today, if you have a specification for writing a software, you can actually build the software 20 different ways. Not all the ways are same. There are 20, and
sure.
It's, when you do a design of a software, what we call as trade-off, because there are a lot of non-functional requirement, while the client gives functional requirements, non-functional requirements needs trade-off. For example, performance can be traded off security. If you have too much security, your performance will be degraded. If you have, great performance, your security may have an issue. Now, what AI is unable to do today is able to take these calls, because these are all subjective calls depending on the client context. AI is unable to take those decisions because not that it cannot take the decision, because it does not have the context. You have to give in the context. Giving the context and giving the instructions becomes far more difficult if you don't know what you're talking about. So what I foresee AI doing is, it will make a good programmer great and a great programmer extraordinary, but it will make a very life difficult for our average programmer. Because if you don't provide the instructions and you don't drive the AI to generate the right code, it will take those decisions in any case. That's the generative AI. It does not ask you, right? It has to generate an output. It'll take decisions. And what it will mean is that you might have issues of security, you might have issues of program software performance, you might have issues of functional bugs being left, and so on. And an average programmer will take probably 10x the time to find and fix those bugs, because he has not written that code. It is like written by somebody else. So his productivity might actually decrease using that AI.
But then I'm going to push you on that, Vivek. So assuming that's true, which I actually do agree, and I count myself as an average programmer myself. So then wouldn't it then be fair to say that forget about which IT service company, but across all of these IT service companies, is it then fair to say that, let's be honest, they don't have the best programmers in India
No,
end up
absolutely.
in like, right?
And
so
that is the biggest transition they have to take.
And
that is the hardest transition. They have to raise the level of their talent profile, because what has happened, which people talk about but not so much in the industry, is that when I joined the industry just before Y2K happened, Indian IT services used to hire the best talent from IITs, NITs, and top tier and all of that. Now, today, because of commoditization of talent, they hire probably most average talent that they have today. Now, that talent profile has to transition completely, because I don't see, as the projections look like with AI, there is any room for average programmer anymore.
Okay, I have another question for you specifically, KK. I was talking to somebody yesterday, and I was just talking about these four or five top IT service companies. I was like, can you do a ranking for me, and what do you think, etc. He said something interesting. He said that, look, I understand what you're thinking between these 4-5 companies, and whatever, forget the ranking for a second, but he said one opportunity that I spot is there is a great opportunity for, he called it mid-tier IT service companies to like just explode out, right? And the reason I'm asking you is because, although it's not really mid-tier, but then relative to the tier below, you would imagine is like Mindtree. The example that he gave was specifically Mphasis. He said that, look, if you look at companies like Mphasis, right? Now, his argument was, and I'll just explain the argument, that in the past or in the initial stages when IT services came, which I'm sure you can explain more about, they had this thing called a gain share model, right? Which was very simplistically, I'm saying my understanding of it, which is that you go to a big company which essentially does not have they have their in-house IT thing. You basically say, look, here's this thing. I know you're doing this thing. I'll just cut this for you. Just give this to us. We will save like $200 million, and out of which I'll take half, you take half. That's broadly what gain share model is, right? So that's a great way to get into companies, because you go to companies and essentially who have never worked with like IT services or taken it out. You basically go to them and you say that I'll save money for you now, and you take half, I take half, or you take a share, I take a share. Very great. But then over time, what ends up happening is, because you have hit all of these many companies, that margin kind of like reduces. So you can't really continue with that gain share model. So then you move into all of these models that Vivek spoke about, KK spoke about a little bit, fixed fee versus billable hours, etc. But however, now, because of AI, that kind of a model again becomes relevant again. So it's almost like history coming back in circle, where now an Mphasis can go to a multiple set of companies and say, you want to deploy AI? We'll do it for you. We'll deploy AI for you, and we will essentially get some savings, and you'll get half, I'll get half, or we get a share. It's much harder for IT service companies like a TCS, like a Wipro, like a HCL or an Infosys to do it, because that cannibalizes a direct revenue that they have. Correct. Do you think this opportunity exists?
That's always a challenge which IT services companies have faced, because the whole idea of vendor consolidation and so on has always been there, and every transition, be it the transition from mainframe to client server or client server to thing,
or cloud,
even
or
automation
SaaS,
when it became popular. There's always been the way in which clients have dealt with it. My guess is there'll be a little bit of musical chairs will happen, but I don't think it'll in any way negate the business. See, because at the end of the day, think of the top 2,000 companies in the world. I can easily hazard a guess that 70% plus really depend on these guys to run their systems, which is running their business.
Yeah.
There is no easy way to get them out. It is tough. So I think there are adjacent opportunities coming, which is where some of the mid-sized companies are also growing. Because if you look at again from a market context, 15 years back, we were addressing the budget of the CIO, which was probably 1%. And all of us are fighting for it. Today, that 1% of the CIO stays, or that 1% has probably become 1.5%. The marketing head has another 1% budget, which is all automating marketing technology. The chief data officer or the chief digital officer is another thing. So overall, the technology spend in enterprises has got a lot more democratized. So there is a larger pie for which everyone is fighting, which is one reason why the mid-sized companies tend to grow fast, because they go to areas which are not necessarily getting addressed by the larger players and they get their wins.
Correct.
Persistent growth is driven by Salesforce implementation, which was never in their thing. So there is enough of opportunities, and to that extent, see, if you look at again the industry, I think I did this some time back. In 20 years, for a global industry to consistently demonstrate growth year on year without a single year being negative, probably the Indian IT services company is that. And I think that will continue for the next 10 years. Yes, they will not grow at double digits or high single digit, but growth will be there. Because technology by nature is de-inflationary.
What do you mean by that?
Which means for the same service, I want it at a lower price. But then there are new opportunities which will make up. So you probably will be at the same level. So if you just look at just numbers, you will sort of say, hey, the growth is only 3%, 4%. But that's not the right way to look at it, because the service which you're delivering to the customer is far higher. See, the laptop which you're holding, if you go back and just index it for inflation, I don't think the price has gone up at all.
No, I agree with you. I mean, this is an Apple laptop. Maybe this is an exception, but I'm saying generally for electronics, you're right. And we haven't even gotten into RAM prices. Because of RAM now, anything is possible. That's a different story. But yes. Vivek, I just want you to jump in last before we get to we'll try to see if we can change any of our minds with the final ranking. But I just want you to jump in. Do you see any dark horses apart from the 5 that we discussed?
No, so I actually don't see too many dark horses, and only I believe that mid-sized companies or even smaller companies, if you go even further below Infosys and smaller companies, I think what may happen is that they may acquire niches and they specialize and acquire niches and then dominate those niche areas, which makes it a little harder for the large companies
but then they end up becoming acquisition targets. No, I mean, like,
that may definitely happen. Yeah, that may definitely happen.
One thing that we all agree, and in fact, one can even argue that at least the top IT service companies have been criticized for, is the fact that you have a lot of money on your balance sheet which you're not deploying, and you're giving it back as dividends and not investing in R&D, which of course now slowly is changing. We have agreed on that, but let's go on.
Yeah, no, I don't see too many dark horses. I think, in fact, I would bet that the revenue order ranking of these companies may not change in next couple of years. May remain the same.
Okay, fine.
Actually, PGK, I need to ask you, have you changed your ranking?
Actually,
sorry, I'd just like to add one point which
yes,
you said. See, since I've been a part of the IT service world, the good part is, once you get into a customer and deliver decent service, you are there forever. In 2000,
the definition of forever is changing, but sure, we can continue.
No, but for 25 years, Avis Rent-A-Car is still a customer of Mindtree. 25 years.
Sure. Actually, I will double down on KK's point. The software business is the most entrenched business. The primary reason is the risk averseness and the pain that the customer has to go through if they ever want to change. So unless you give tremendous, not even decent service, my experience have been that unless you give tremendous pain to the customer, which is higher than the pain that they're going to have while changing the vendor, you are there forever.
Okay, fair. I mean, I hear both of you. I understand what you're saying. I feel like these are all like paradigms from a slightly earlier era.
Yeah.
And okay, that
you're right.
I mean, like I said, and I say earlier era, I count myself in it because I'm also in this era. So, but I think the difference that I'm saying is that you're all correct. I do agree that, like we all know that all change is like not going to happen so quickly. There are large parts of companies that probably don't even have them, not a single employee is even open ChatGPT, forget about anything else. So I'm pretty sure all of this is true, and I'm sure that nobody's expecting change to happen so dramatically, so quickly in the next few quarters, etc. I think the reason why we brought up the ranking part and the 4 IT service companies is because we said, look, this also is an opportunity. Like any disruption is an opportunity, not necessarily for someone from outside to come and disrupt the 4 IT service companies, which is okay, fair. We understand that story. but there is an opportunity within these 4 or 5 IT service companies to now go one above the other. I think that was the broad opportunity that we were framing it as. Just as you said, it's very hard to remove, but I think that each of these companies knows what does it take to remove one of them. I think that's what I
So
was
Praveen,
thinking.
more than the remove, I think if I try to look beyond the horizon, I mean, if
Sure.
I try to look beyond the horizon, the biggest disruption that is coming is the definition of software might change. So what it means is basically today what we have, like if you have a a sales software like a Salesforce.com now, which is a complete SaaS based service. The companies like Persistent help you customize it for our enterprise needs. Now today, what happens if the nature of the software, the entire Salesforce get removed? So it gets removed by AI itself, which means that each of the stakeholders that interact with Salesforce, like the sales teams, the operations teams, and so on, they actually interact with the AI model, which has some database somewhere to persistently store the data, but it is not a software in the definition that we have for software today. That it interacts with the database, it stores everything, and the interaction entirely of all these stakeholders is not through that user interface, browser based or mobile app based user interface, and the forms and the clicks buttons that we click. It is through a AI, a chat bot or a voice enabled bot and so on, with the AI model directly interacting with the central repository, which kind of stores all the data. And all the processes are nothing but the prompts and the agentic workflows that are put together. Now what happens if the definition of the software itself changes? Now it is not immediately that is going to remove the software that we see today, but it is about the new software that is going to be built, and the transition that will happen from a legacy model of software to this new AI model of the software, and the opportunity there is to lead in this new world, and that is, I think, is the new opportunity pool that exists, and only time will tell who will be able to acquire how much of it.
Okay, fair
Having
enough.
said that, I'd just like to add one perspective. While I did say that since technology is becoming core to enterprises and the IT services business will still continue, I think we should also watch out for more global competition. In the last 10 years, an EPAM has got created, which more East European based, Globant has got, and all of them are starting to compete on an equal footing. So I think we shouldn't live with the mindset that, hey, only Indian companies can survive and thrive. While there is opportunities certainly for the mid-sized companies to go into niches and grow their business faster, and clearly there has to be a lot of transition within the 5 large companies you talked about, there are potential global competition also coming in.
Can you give us a broad picture of this? One you said is East European.
Yeah, EPAM is East European. I think probably in terms of revenue, they're in the $4-5 billion range, listed in NASDAQ. Globant would probably be at the same level or even a little higher.
Are they also East European?
No, they are Argentina based, if I'm not mistaken.
Very interesting. I didn't
So
know
this is the first time I have seen within the last 10 years companies being built not in India but outside India.
that are competing with.
Yes, that are competing.
Interesting. Okay.
There is also ThoughtWorks, which
ThoughtWorks,
which
of course, is good. Yeah.
which
ThoughtWorks is a
which-
US company. I didn't cover
US company.
US.
Yeah. So it is ThoughtWorks. No, ThoughtWorks always prided itself for having a very high-end, talent base.
Correct. And culture. And very,
and
very
culture.
high.
And so, I'm not sure, I haven't heard about them as to how they are navigating and their ability to navigate this AI wave.
To be very honest, I haven't heard much about ThoughtWorks in a while. Right? There was a time
On a
when
lighter vein, ThoughtWorks has sort of got relisted back because I'm a senior advisor at Apex, who's their owner, so I can't talk more than that.
Fair enough. I won't push you on that, but I will just say my perspective, which is that, and Rahil, because I've been in Bangalore for a while, and of course, KK knows it, and Vivek is also in this industry. So ThoughtWorks, like sometime back, like 20 years back, probably like one of the most pioneering companies, along with Mindtree, etc. Very
The best
high.
brains wanted to work for them.
Best brains wanted to work for, literally like people would try to break into their office just to work for them, right? They have they had, I don't know if they
Koramangala.
still do, they have an office in Koramangala, right, which is right next to that Satyas, which is what I know ThoughtWorks for. There is ThoughtWorks office in Satyas. There is this pub. It's a nice place, and you see a lot of ThoughtWorks employees there. Really, really elite. Really, this thing. So yeah, I haven't heard of them in a while. Okay, fantastic. I'm just going to go through again. I'm going to ask Rahil. Rahil, did any of these discussions change your mind?
No, if anything, it reaffirmed my belief in the ranking that I came up with. Also because I think, and just to summarize, right, like when we spoke about TCS, Infosys, Wipro and HCL, I felt like TCS, Infosys and HCL, and correct me if I'm wrong, have a far more on the ball, we are facing this, we are actively pivoting approach to what's going on. Whereas I find Wipro very reactive. Like Wipro seems to be doing a little bit of damage control versus actually taking a stand.
That's what they want you to think. I'm a big Wipro supporter. I'm fully backing Wipro on this. It's all part of the plan. Sorry.
What
Vivek?
about you, PGK, if I can ask?
Okay, you know what? I mean, I started off by saying that Wipro. To be very honest, I don't think I've gotten much more confident, but I will say that I'm very, very intrigued by HCL. I think HCL Tech is the one that I learned the most about today. Like, I always known them in that list of companies, but I didn't know how uniquely positioned. I think that metaphor of a knight at the center of the board with the ability to leap in any direction, I feel like that's a very compelling company. Vivek, has anything changed your mind? Must be very
So
hard.
I think pretty much reaffirmed. The only thing, after the conversations we had today, I would see, HCL and TCS probably both, jointly at the top of my ranking. And with Infosys and last being Wipro. And so I think, and HCL, as you rightly said, the ability to navigate quickly on the chessboard is what we have to watch out for.
Okay.
I'd just like to add one perspective. Please. I think, though the conversations have shown a light, what I call a lukewarm thing to Wipro, I think you shouldn't write them off.
I'm definitely not writing them off.
Because the reason is, one, obviously, I should confess, I spent 18 and a half years there. My entire career has been influenced by Wipro. And to be honest, I'm also, in a sense, with touch with people. I think what really pushed them back was the 2 CEO transitions, which really they lost direction. And to that point, since I know Rishad very well, he's extremely sharp. He knows what to do. And they are not necessarily pressurized by market. At the end of the day, obviously they own 74% of the company. So they're not dictated. So the transitions which they're attempting, I think will take time to deliver. But certainly I think it's a company which has the potential and hopefully will deliver.
That's an interesting point you said, that they're not really dictated by markets. You're right. There is a significant holding by the promoters itself. So which also means that at a time when you want to take a risk, you can absolutely go all in and you can do it over the long term without thinking about it over the short term. Okay, I changed my mind. Wipro back on top. Okay. Thank you so much, KK. Okay, such a wonderful discussion. Thank you. I just want to say thank you, Vivek. Thank you, KK. You've been really, really wonderful. This is one of my favorite episodes. So thank you so much.
Fantastic.
Thank you. Wonderful.
Thank you.
Pleasure. Thank you so much.
Thank you for listening to this episode of 2x2. This episode was produced by Udantika Kashyap and mixed by resident sound engineer Rajiv CN. If you feel there's something we've missed out in this discussion or feel some numbers or facts don't add up, you can write to us at 2x2@theken.com. And if you're listening to this episode on Apple Podcasts, please show us some love by leaving us a rating. Lastly, if you love the episode, share it with people, your friends, family, or colleagues who might find it insightful as well. We'll be back next week with an exciting discussion and a 2x2 for you to think about.